Disclaimer: this video is for educational and informational purposes only and is not financial advice. Always consult with a qualified professional before making any financial decisions. Today, we're diving into the concepts of bid, ask, and the spread in trading. First up, let's talk about leverage. Leverage allows you to control a larger position with a smaller amount of capital. But remember, with great power comes great responsibility. High leverage can amplify both gains and losses. Now, what about margin? Margin is the collateral you need to open and maintain a leveraged position. It's crucial to understand how margin works to avoid margin calls that can wipe out your account. And here's the double-edged sword of high leverage. While it can lead to significant profits, it can also lead to devastating losses. As Robert Arnott wisely said, in investing, what is comfortable is rarely profitable. Before we proceed, if you found the information in this video informative or helpful, please do me a favor. Take a second to like this video, subscribe to the channel for more content like this, and share it with someone else who might benefit. It really helps the channel grow. Now let's continue. So, how do you manage risk when using leverage? It's all about setting stop-loss orders and knowing your limits. Always have a clear strategy in place before entering a trade, especially when using high leverage. Remember, trading is not just about making money, it's about protecting what you have. In conclusion, leverage can be a powerful tool, but it requires discipline and a solid understanding of the risks involved.